banks are way over leveraged, but you cannot borrow your way out of debt. And the more that you have to borrow, the more leverage you're taking on. And eventually that leverage has to bust.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 8th through January 15th, 2024, while supplies last. First this week, we feature backdated 1/4 ounce gold eagles at just $65 over melt. Next, the Armenian 1 ounce silver Noah's Ark coin is $3.49 over spot. And finally, we have a very limited quantity of 1 ounce silver Trump Wanted bars at $3.15 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Todd Bubba Horwitz from Bubba Trading. Todd, thank you so much for joining us today.
Elijah, always a pleasure to be with you. It's great to be on the Finance Show.
Well, it's great to have you. I did want to kind of have a follow-up from our last interview and have a look ahead towards this year of 2024. Last time we had you on, you talked about how the banking system was in big trouble and how that there had never been a bigger line at the Fed's emergency lending window. Can you give us an update on this, your current assessment of the banking system?
Well, the line is bigger, Elijah. There's more lending, there's more borrowing, and more emergency lending. The banks are way over leveraged, but for whatever reason, the overwhelming money supply, which has shrunk a little bit, but is still well overvalued, is allowing the Fed to continue to feed these banks. But we know one thing: you cannot borrow your way out of debt, and the more that you have to borrow, the more leverage you're taking on, and eventually that leverage has to bust.
So what will that look like then for the people having funds in the banking system when this goes bust?
Well, I mean, the banking system is going to be, the taxpayers are going to bail out the banks again. This is the real problem when you look at it, Elijah, is that we, the taxpayer, get the foot the bill. So the banks get to lend as much as they want. And if they make money, great. If they go bust, guess what? They come to the taxpayer so that we can bail them out once again. So listen, FDIC insurance, as long as you follow the guidelines of that, which is no more than $500,000 any one account, any one bank, you're fine. I mean, you're going to get your money back from the government. You're going to get it back basically from yourself, because obviously the taxpayers fund the government, and the government gives us back part of our money as they overtax us in the first place.
Yeah, I believe it's $250,000 for individuals, $500,000 for joint accounts there. Your perspective on, a lot of people are talking about bail-ins or kind of extraordinary measures that could be taken if we see a major banking crisis. Your perspective on the possibility of that?
Well, I mean, again, I'm way different than anybody else. I'd like to see them let the banks go bust. I thought they should let them go bust in 2008. I don't know why you and me as a taxpayer should be bailing out the banks. They're running a business. And if you're going to run a business, run it the right way. You can't get over leveraged. You can't get over budgeted, and you can't lend out more, because basically what banks do with the fractional banking laws is basically print more new money anyways, which is one of the reasons we're in this problem with oversupplied money supply, not only the Fed, but the banks, lending out at more than 10 to 1. The law states 10 to 1, but they lifted those freezes a number of years ago during COVID. But again, if you're running a business and you can't make it, is somebody going to come and bail out Liberty and Finance if something goes wrong? Is the Fed waiting in line for you to give you cash? No, the answer is. And if you and I lived like the government or like the banks live, we'd be either in bankruptcy court or jail. We wouldn't have the same opportunities to be recovering from what goes on. And that is the problem. Listen, if the banks are in trouble again, let them go bust. Bail out the depositors if you want to bail out anybody, but to bail out the banks is a joke and ridiculous.
Yeah, and I mean, at the end of the day, even if the depositors were bailed out, in a sense, like what happened with Silicon Valley Bank, I mean, the money really eventually, the taxpayer has to pay for that, right? Because
we pay for it. Listen, government makes no money, they make debt. Okay, the Federal Reserve makes no money, they print money, but they make no money, they make debt. The taxpayers fund the government, which is why the federal government is way too big. And of course, if you look at the Constitution, it tells you that the federal government is way too big, but that's a story for another day.
Right. And when it comes to kind of the situation the banks are in right now, what I'm hearing is a major issue. So back in March, there was an issue with higher interest rates making the U.S. Treasuries, they were holding long-term U.S. Treasuries of a much lower value. But right now, it seems like an issue could be the commercial real estate market. And if these businesses that own so much commercial real estate are going to have to refinance, that could, at higher interest rates, that could spell disaster for the banking system. Your perspective on that?
Well, I think the banking system, listen, I think, first of all, I think commercial real estate is basically dead as we know it. Okay. I mean, don't get me wrong. There's still going to be a need for obviously commercial real estate, but as far as, the big cities and the big businesses that are running in the cities, most people work from home now. The companies don't need the property that they have. So we're over proper. We have too much property. We have too much debt. We have too many issues. And yes, it's going to cost a lot more money to finance. But again, if the banks make the money accessible, which then puts the taxpayer at risk, then it's not really that big of a deal to them. It's a big deal to us because, again, we'll get the opportunity of getting to foot the bill once again. But we've built a problem with so much massive amount of debt and so much financial manipulation through the Federal Reserve that at some point we're going to see the repeat or similar to 2008, 2001, 1987. I mean, these things happen, but again, this is happening for no reason. This is happening more because we have an administration that is willing to break this country and wants to believe more in socialism than in capitalism. And without capitalism, it's hard to keep these banks and keep everybody running because, again, everybody's becoming dependent on the government. I mean, 63% of the jobs created last year were either government or special projects.
I did want to touch on the jobs numbers because they're very misleading, and it seemed like there was a lot of over-reporting lately. What is the current state in the jobs market?
Well, if you ask me, the jobs market stinks. But again, if you ask the government, they tell you everything is wonderful, except that they're using the U3 versus the U6. So the U3 doesn't count for people that have really quit looking for jobs. They're telling us things that are not factual. The bottom line is very simple. If you go back and look at every report last year was revised lower to the amount of jobs that were created. They come out with a headline number, and then nobody looks at the revision the next month. Nobody cares. We're on to the next month already. Remember, markets themselves are forward-looking, but the economy is more backward-looking, and that's really the problem. And we're in this big jumbled mess where only the very wealthy are having a good time right now. The average middle class, if they're working, they're not making as much. A lot of them aren't working. We've had dramatic amounts of layoffs. Okay, earnings are lower. Inflation is higher. No matter what anybody says by numbers, because again, the CPI number, which is reported by the government, is garbage because it includes 4% for food and energy. Now, the average family, how much you spend for food and energy, barring a major expense or a disaster. Most people spend more than 30 or 40% of their annual income on food and energy. So again, if we would get straight numbers, we'd have a much better realization of what was going on.
No, you mentioned how the jobs numbers were revised lower, it seems like, for almost every single month there, and how people don't really pay attention to that. So it sounds like to me that investors and businesses based decisions on numbers that were wrong. So does that mean we're kind of in a fake economy right now because business decisions were made and investing decisions were made based on numbers that were inflated?
Well, yeah, I mean, but again, remember, it's really about the money. It's about more of the direction of where the markets are going. But is it real? No. I mean, it's all phony money. I mean, if you go back and look in your own life and go back, I mean, you're young. So, but if I go back, in the 80s, I made a lot less money, but it went a lot more farther. Okay. So again, when I started trading, the Dow Jones was 800. It's now 38,000. So again, the numbers we're playing with monopoly money right now. And that is the bigger problem because again, it's really imaginary. Have we had real true growth in this country? I don't think so. I think we've had artificial numbers that make it look like we're growing, but I don't think we've had what you would consider a true growth environment because we don't manufacture anymore, no matter what they tell you. Everything here is a service product. All the service products are farmed out to India and to somewhere else off the shore of the United States. So where's our growth going to come from? Where's real GDP going to come from? Where's the manufacturing going to come from? And the sad part of it is, Elijah, is that the United States is the one country in the entire world that could be 99.9% self-sufficient without any help from anybody. The only thing that we're missing here are the rare earth minerals that come from China, but we could do without those. We could find something to replace those and be an island all to ourselves without having to give our capital and our hard-earned dollars to everybody but ourselves here.
Now, in the midst of all of this, we see that the government is going even further into debt. The debt seems to be going parabolic, with the debt now surpassing $34 trillion, if you go just by the official numbers there. With this in mind, a lot of this debt is going to have to be reissued at higher interest rates. So what does that actually mean for the average person out there? How is this going to be impacting them?
Listen, we know that government overspends. We know that the continuing resolutions that they continue to put together, the budget. Why don't they have to live on a budget like you and I have to live on? Okay, this is always a problem that I have. But at the end of the day, the debt itself, you remember, numbers get bigger. They multiply faster as they get bigger. So, is 34 trillion in the big scope of where it was when President Trump left office? I mean, Trump had built it up pretty big himself, and I'm a big fan of Trump. But again, he built it up, as is every president in history. And again, the bigger the numbers get, listen, eventually it all comes out from the tax dollar. We have to fund this debt. We're going to have to fund the overpaying interest. I mean, interest now is I think $1 trillion a year that we're now paying or so, which is ridiculous in its own right. You're never going to get out the way that we do business.
You mentioned how under Trump there was a lot of expansion of the U.S. debt as well. You've said that you think that Trump will be winning this election. It seems like he is up in the polls lately. Do you think he can turn this situation around at all, or does it really matter who's going to be elected next time with respect to the U.S. debt?
Until government stops spending, until we can stop having these debt ceiling hikes and these continuing resolutions, it's never going to stop. And that I would hope that President Trump would do that if he does become reelected. I was really disappointed that when he had the opportunity to shut the government down when he was in office in his first term, he did not take that opportunity. I think that's a mistake. I think that there's got to be a point in time you got to say enough. And certainly it's got to be enough for us supporting every other nation but our own. And I think it's time that America looks to itself and takes care of its own debt and its own problems before we worry about the rest of the world.
Now, I know in previous times we've had you on, you said that interest rates are going to be higher for longer, right? It seems like the talk out of the Fed is at least signaling a bit of easing this year. What is your take? Are we going to see any sort of rate cuts in 2024?
The whole stock market rally that we've seen from the fourth quarter forward was all about rate cuts coming. Jerome Powell has really never directly said that they're going to cut rates. I don't know how they can, Elijah, but again, listen, I don't have control of what is real. When you don't let the free market price the market the way it's supposed to, and you let the Federal Reserve manipulate the rates the way that they do, we can get anything, okay? There should be rate hikes because the markets would support it, okay? Because not the stock market, but the actual buying and selling, the price discovery market will tell you that interest rates can be higher. But again, we've got too many people worried about other things and trying to deal with helping the rest of the globe and funding Ukraine and taking care of all the other crap that is, instead of taking care of America first. And I think it's about time we go to America first and get rid of these debts and let the free markets go back to repricing themselves, because every asset class will price itself through price discovery if you allow it to do so.
Moving forward here now, looking at the market, the stock market for 2024. I know previously when we've had you on, you've been forecasting a market crash, and it seems like we're just seeing, rallying in the last few months for the stock market. What is the stock market signaling right now to you?
Well, listen, it's still going higher. And as I've said very clearly, I'm not backing away from, I still think there's a 50 to 70% cut coming. I mean, I think the haircut is coming. Now, again, I did also say that I'm not going to fight it. I'm not going to get in the way and say that it's going to happen by next week. Last week we started out with a 5% down week. All of a sudden, we're back to rallying again. you can't get in the way. You cannot, as they say, as a trader, you cannot fight the tape. Okay, you cannot fight the overall market. And my point here is, look, this is all going to melt down. There are so many warning signs out there. At some point, we're going to see a replay of 07, 01, 08, whatever. But until it happens, again, there's nothing to do. You either, if you're going to play the market right now, you play with it, which is going higher, or you watch it. You cannot fight what's going on, because I have no idea how much further they can push this market. I mean, 26% rally in the fourth quarter last year. Hey, what a joke. Industry stinks. Business stinks. Jobs stink. Market's up 26%. So again, you cannot worry about the fundamentals. At some point, the warning signs will come through here. These markets will melt down. And again, they'll rally again. I mean, again, remember, just the simple statistic of the markets is they go up 8.5% year over year. What happens over those year over years is not always a straight line. And we will get a meltdown. It's just a question of when.
Now, as for the precious metals, since the last time we talked, which you called for a breakout in gold, and that's what we saw, and we've seen sustained levels above the 2000 level. Your take on gold for this coming year?
I think gold is going to continue to make new highs. I wouldn't be surprised to see gold up 10, 12, 15% this year, 2,500, let's say. I'd like to say I think silver will get back over 30. I was wrong on that. I thought silver would get in the 30s last year. It did not. It's been relatively weak for some reason. But I think the precious metals are a great place to be. I think that, again, anybody's portfolio, no matter what you invest in, should include some precious metals. And I'm not talking about that paper crap that you can buy on the exchanges. I'm talking about you better own some real physical metals, because, again, my philosophy and my theory is that we could have a need for the currency of gold and silver again, and you may need to spend it. That paper stuff that they sell is not spendable, right? You better have something you can hold in your hands and touch and feel and smell.
Yeah, and getting back to the top of this interview with the troubles in the banking system, you mentioned the FDIC limit of $250,000 for individuals, $500,000 for joint accounts there. But at the end of the day, if that presupposes that the dollar is worth something and you can use it, so I think a lot of this, you could say, debate about is the banking system safe kind of misses one of the big issues is, what is the dollar? What is the value of the dollar going to be?
Well, again, what is it really worth? It's worth nothing. If you go back to 1913, okay, compared to what it's worth then, it's worth zero now. I mean, again, look at what you have to earn just to live a life. Okay, that's the big issues that I always see. Look at your rent, look at your mortgage payment, whatever it is, your car payment. I mean, I bought a new Eldorado in 1985 for $10,000. Now they're over $100,000 if they still make them. I mean, again, this is so the dollar, again, the dollar amount is meaningless. It's how much does it spend? What can you buy with that dollar? And that dollar buys a hell of a lot less, and it's a hell of a lot higher than it was. And that's the biggest problem. And that's exactly what we're dealing with in this country right now, which creates even bigger problems. And again, it goes back to that we have to quit worrying about supporting all these other places and worry about taking care of the people in this country first.
If our viewers are interested in learning more and finding more about your work, where can they go?
They can go to BubbaTrading.com. They can also sign up for I do a daily update, about 2 minutes a day every day, that they can certainly sign up for at BubbaTrading.com, or they can email me direct at Bubba@BubbaTrading.com.
Sounds good. And Bubba, any last thoughts before we let you go?
Yeah, just be careful. I mean, again, if you're going to be investing in the market, be prepared to invest and be prepared to sell off. Don't try to short the market, and make sure that you have some precious metals in your pocket just in case you need them.
Todd Bubba Horwitz, thank you so much for your time, and God bless.
Thanks, Elijah. Have a great week.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for January 8th through January 15th, 2024, while supplies last. First this week, we feature backdated 1/4 ounce gold eagles at just $65 over melt. Next, the Armenian 1 ounce silver Noah's Ark coin is $3.49 over spot. And finally, we have a very limited quantity of 1 ounce silver Trump Wanted bars at $3.15 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.